Think you can cough for me there? Oh yeah, that's definitely it. That's the heartbeat of real estate news. Is the Canadian real estate market and housing prices going to be the next thing to feel the impact of the coronavirus? How about the mortgage stress test? Is the government going to finally review that? What about their first-time homebuyer program? How much of an impact on the Canadian real estate market has that had? Are buyers taking advantage of it? We're going to go through all that and more in this episode of Real Estate Rumblings. Hey guys, I'm Matthew Pfeiffer, and it's Real Estate Rumblings time. We're going to go through some mortgage news, real estate news, get you up to speed on everything that's going on in the media. First, I got to get these things off though. Nurses and doctors, I have no idea how you wear those masks all day long. I feel like I couldn't even breathe trying to do the intro in this here. And since we're on a medical theme, let's do a medical bad dad joke. If you ate an apple every day, would it really keep the doctor away? Guess it depends how hard you throw it at them. Okay, let's get down to some articles here. And if you want to read more, you can read all the articles. I'll have them linked below. You can check them out. Let's start off with the mortgage stress test. This is something that was put in a couple of years ago now. And what they wanted here was to make sure that Canadians could afford mortgages if interest rates went up. So if you had any sort of mortgage, if you're refinancing, buying, anything like that, you had to do this stress test. And it was 200 basis points above what your quoted rate was, or 5.19%, whichever one of those was higher. The idea was to slow the market down, especially in hot markets like Vancouver and Toronto. And then of course, make sure that as interest rates came up, if they did, we wouldn't have a bunch of defaults in Canada because of people being unable to pay those mortgage payments. Well, right now, it doesn't seem like it's had a slowdown in any of those hot markets. Vancouver, Toronto saw a little bit of a dip, and then after that, they continued on. Didn't have much of an impact. In areas like the Prairies, where things were already starting to slow down, it seems to have accelerated that slowdown a little bit. So they're asking for maybe a more regionalized approach, more nuanced. I don't know if we're gonna get that, but it's something that's been kicked around. Guess we'll have to see. Then of course, next one I want to go over here, first-time homebuyer assistance program. They're calling it the first-time homebuyer incentive program. This was rolled out by the government of Canada in the fall of 2019. The idea was to help first-time homebuyers afford homes in Canada. They were worried about prices getting too much and being priced out of the market. So what they were going to do is if you bought a resale house, they would give you 5% to add to your down payment, or 10% if you're buying a new house. The idea is it would reduce your total mortgage payments, saving you money. It doesn't change your qualification. They still do qualify under all the same rules as anybody else. Now they had $1.25 billion to be used in this program over 3 years. I think they're expecting a lot of people to use this. It was a big part of the election. Well, right now we've had 3,500 applications, and only 2,700 of those have actually been accepted. So it doesn't seem like there's a lot of people looking at this program. We've had about 5 or 6 months now this has been used or available for Canadians, and it just doesn't seem like they're taking it. It's a program I'm not really a big fan of. I haven't been recommending it very much. It's a shared equity program, so if your house goes up in value, you have to pay more back on that loan. That being said, if your house does go down in value, the government's also taking an equal share in that decline in price. So there's pros and cons. I did a giant spreadsheet I can go through with people, but it's not a program I've been recommending much, and it appears that in general, Canadians aren't taking advantage of it either. $1.25 billion to be spent over 3 years, and right now, with those 2,700 applications, it's only $51 million has been used. So very underutilized right now. Next topic here, that's the one you came for, the coronavirus. How is that going to impact the Canadian real estate market? A couple of different ways to look at it. Does it push prices down as people have fear in the market? Or do we continue on like nothing happened? Two different ways to look at it. Well, one is, does fear in the market, does it push down interest rates? Does it get people maybe looking at different assets instead? Does it have people not wanting to immigrate to different countries? Does it slow down immigration to Canada? Does it have people just not wanting to go out and look at houses because they're worried about getting the coronavirus? Well, that's definitely something that could have an impact on it. We're going to see there's some fear of maybe interest rates going down because of the coronavirus and volatility in the market. I guess we'll have to wait and see on that one. Then there's a flip side. SARS, that was a big outbreak not many years ago. How did that impact the real estate market? Because that's kind of similar. It was getting the same type of media attention, a lot of fear. How did it impact the real estate market? It didn't. Even in Toronto, really hot market, it was the epicenter of the SARS outbreak, had virtually no impact on things. We didn't see a drop in sales, slow down in the economy, anything like that. Everything just continued on. And that's where I think this is going to go here. I think it's going to get a lot of media attention, but I really don't see it have a slowdown in the real estate market. I think things will continue on just like they were. Last thing, let's go through some interest rates here because there's been a change in that. I did my last video and I talked about The interest rate have kind of held flat by the Bank of Canada. Some interest rates have been dropping by the banks because of that. Well, that's continued. Right now we're seeing 2.79, 2.89. I even saw a 2.491. It's a great interest rate. I don't think it's a very good mortgage. There's a lot of difficulties in terms of prepayments and breaking the mortgage and stuff like that. Like with all mortgages, make sure you read the fine print. But there's a couple of good ones out there. So if you're in the market to buy, interest rates have come down a little bit. That's going to help you out in those overall mortgage payments for you. That's it, guys. That's how I'm going to wrap this up here. Thanks for watching.